Good morning, fellow option traders. This is Jeff, and this is the daily scan for Tuesday, February 5th, 2013. First thing for today, let's take a look at what's on tap as far as news is concerned, or announcements. Really nothing going on here, with the exception of the ISM non-manufacturing index, which is a gold star, and probably, even if it's out of range or whatever, probably won't have much of a big impact on the market. But you know, when these governors of the Fed speak, anything can happen. Here we have Elizabeth Duke speaking. Elizabeth Duke, I believe I took a look at this, and she is speaking in Georgia, and I wonder if she's related to the Dukes of Hazzard. I don't know. I wonder if she drives around in a General Lee. Well, that's really digressing. Looking at the market, we have the VIX popped up a little bit on yesterday's pullback, up to 14.5 roughly. We'll take a look at the chart here, and remember yesterday I was mentioning that, you know, kind of like it to be above 15. This was a nice time back here, and the end of last year and almost all of last year was pretty good. It dropped below 15 a couple of times in September, but for the most part, you know, anything above 15 is makes for a pretty nice juicy options market. But we're just not seeing that right now. Gold has been pretty flat. This is kind of a surprise here. Well, silver had kind of a pullback yesterday, but it's up a little bit today. Oil is, last time I looked at this was around $98, so that's doing pretty good right now. Happy to see that, although gas not reflected in gas prices, at least not in Florida. And the dollar's at 79, pretty much remaining flat. You know, the monetary policy, they're looking for a weaker dollar. So you can expect, as they continue printing, for the dollar to get weaker. Let's take a look at our current positions. Amazon, I did enter that yesterday. I got the alert at around 9:45. Let me see, I think I wrote down the time here. Yeah, it was around 9:45, and I entered with a 1-to-1 risk-reward ratio trade here, and I actually entered with one at 260. Let's take a look at the risk profile for that. So our reward is 260 and the risk is 240. And the trigger here was this earnings announcement, and then the stock just starting to tank, momentum starting to tank on both the short-term and the long-term chart. So that's why I went in with a long-term trade, which is this March expiration date. I didn't do a weekly or anything, I just did a March, expecting the stock to continue to trickle lower with possibly some spurts of some bullish spurts in there. Still expecting it to move lower. Alright, CRM. Remember, that's the one that I added to that position, and that's still doing pretty good. Pretty happy with that. Panera Bread still not doing anything. Whoops, let's go back here, bring them up. Panera Bread, you know, this is this freaky day here, but we just let her ride, and it moved back up, and we're in safe territory, but that volatility is increasing, and we have an earnings announcement after the market closed tonight. Starting back over with the A+ list, I'll keep this short today because yesterday was so long. Apple is not showing any sort of strength here at all. We have earnings coming up, the end, or a dividend coming up. We did have earnings, I'm sorry. We have a dividend coming up. But since earnings, not able to break through this 460 price here. So if you were to do a trade, not thinking about delta or anything like that, a good trade here would be anything below that 460 mark. And if we were to go for regular February expiration, and we were to do a fair call at 460, you'd be able to collect 75 cents on that, but there would be a sizable amount of risk here. You would have $425 in risk to make $75. Just something to keep in mind. But a higher probability trade than a 1-to-1 risk-reward ratio, of course. Take that off of there. All right. We looked at Amazon. Here's Baidu. This was a trade that I put in last week. Locked the price down, and it's doing okay. Let's take a look at the chart here. It was right here when I noted that trade with a secondary entry here. So it's doing fine. They have had their earnings last night after the market closed, and they missed by 4/100ths of a penny. Boy, that's splitting hairs, let me tell you. So what are we looking at here for an open for them? Well, they closed at 107, and we don't have any volume yet, but the bid and ask is right around the 101 mark. So they will probably open down, which will benefit my simulated trade here. All right, let's go take a look at CF. We were looking for a dip down here. Now this, we got a little bit of a hook here in the %K. But I'm willing to bet that if this stock opens down again today, that we're going to get a continuation down here on the stochastic. And we're looking at least for right now, a shift in momentum to the downside. But on the long-term chart, we are still positive momentum, although the short-term measurement here, which is this green line that turned dark green, showing that the actual MACD, the moving average is the dots, but the actual MACD is hooking down. But it has done that before, even though it is climbing. So we have to take all factors into consideration: moving averages, the 15 EMA and the 50 MA. I have to take everything into account, but still waiting for some sort of hook to come down here with an uptrend for us to get a signal to get in. Chipotle. They have earnings tonight after the market also. Staying away from that one. Just hoping for some sort of resolution so we can get back into these. That's one of the things about... Well, let's go back here and look at Chipotle, because we may want to make a bet on this one. What do we have here? We have positive momentum. We have a long-term downtrend, but momentum shift to the upside. In their last earnings, 230, and they were looking for 230. They got 227. That hurt them. How about the earnings before that? 295, actual 256. That hurt them. What do we think is going to happen here? My bet would be a play to the downside. So we will do I'm not going to play with real money on this, we'll do a simulated trade. So, we have earnings tonight, so we're going to want to go with the cheapest. We got 71% IV, 50% on the February's. Well, I don't think it's going to matter. It's just a matter of how much money you want to make. So when IV collapses, we know what happens from what I was talking about yesterday. So we're betting to the downside. So we would do a spread at 310. So that's almost a 1-to-1 risk reward. Reward is 230 and the risk will be 270. Let's go take a look. Excuse me. Yes, 270 risk, 230 reward. We'll take a look at that tomorrow and see how that worked out. All right. We leave off Chipotle. Salesforce, we looked at that one already. Google is screaming, might be the new darling here. We didn't get a trigger yesterday, and so therefore we're not interested anymore, so I will delete that. Don't want to chase it right now. So we're looking for another move down here on the stochastic and a hook to get us in. MasterCard. No triggers here on the long term. No, nothing here. Although I'm pretty sure you would be quite safe doing like a 20 delta on this. And let's take a look. You know, it's not a, it wouldn't be a pretty entry. It might be a continuation type of an entry. Which one would we pick here? Oh, we got pretty low IV. It's just, I don't know if it would be worth it here. Let's take a look at February and look at a 20 delta. That would be this one here. That's 72 cents with a $5 spread. Not real pretty, not real profitable. Pretty safe though, probably, because we're talking up here at 530, and whether it'll ever get back up to here in the next week or so is questionable. I think I might actually do this. I think this might be a relatively safe trade, so I'm going to lock that down. Make a note of it here. And see if I feel like doing it after the market opens. Alright, Netflix. What do we have here? A similar situation. Now, we have a hookup. This is a good enough entry for me. This one definitely is looking very good. So I'm going to put an alert on this. And I don't want it there though. I'll put it up a little bit higher. Last adder above 175.67. Well, let's make it 175.25. There I have an alert in there. So we would want to go with a 20 delta on this one, and that delta would be right around 160. Whoa. Seriously? With 10 days left? You're going to give me 352 on that? Down here? Wow. That's a pretty nice play, I guess, right? That's less than a 1-to-1 risk reward, because here we have risk 148 with the possibility. What is going on here? Did I do something wrong? I think I did something wrong here. Alright, we want it on the put side. 160 definitely is out of the money. Let's try that again. There. I don't know what happened. I don't know what I selected. But $1.12, that's pretty decent for 160. So we have our alert in there, and that's what we're going to go for with this 160. Unless it gaps up, we'll still be looking for a 20 delta when we enter, if the alert goes off today. Alright, that's looking good. Alright, price line. Let's look at this chart here. We did not get an alert here on price line. So, actually kind of tanked a little bit, which is pretty surprising. So we're just going to watch this for another day to see if it hooks back up. And then last but definitely not least is Panera, and we're in that, and we already talked about it. Alright, so a little bit of background noise here. The furnace is running down here in Florida. That's pretty embarrassing. But it was a little bit chilly this morning, so I had to warm up. But that's it for today. Thanks for watching. Have a great day, and happy trading.